Active Investor here, bringing you another independent analysis. This time we're taking a look at ticker symbol SKLN. That's Skyline Medical Incorporated. The chart we have here today is a 30-minute chart. Each candlestick on this chart representing 30 minutes of trading. We want to focus on what occurred here, this uptrend, where it made some higher lows, where the price is going now, and where it looks like it might bounce. Because obviously we had this great run up, couldn't hold the levels, but we ran up some more, and even more, but we couldn't hold the levels. So the entire chart is still looking pretty good. For a long time, Skyline was just trading around that 13 to 14 cent area, and now it's trading above 17 cents. So the chart is still looking really good overall in the long-term picture. But for the short term, we do have a bit of pullback. So let's see how strong that pullback is and if it looks like it's going to reverse back to the upside. We can get a good picture by taking a look at our relative strength index down here at the bottom. So I'm going to draw a line to where we went overbought, to each area that we closed. Alright, one more. So we went overbought here on both the RSI averages. Overbought here, overbought here, overbought here, here, and now here. So you can see, obviously, we had a higher overbought, higher overbought, higher overbought, higher overbought. So uptrend was super strong the entire way. Matching in line with that line, interestingly enough, is the fact that we kind of almost bounced off. So we had a nice uptrend, continuing all the way up, making that high at 23 cents. Now if we remove all that, let's focus on where we are overbought now. So that last area that I didn't remove, overbought right here. Current overbought area right here. So signaling that we are in a bit of a downtrend. Obviously our candles also tell us that same story, but the relative strength index gives us a good idea of the strength of that downtrend. And it is pretty strong. However, the good news is that we didn't close down here at 17 cents when we went overbought down here. So we went overbought, and if we closed at 17 cents, the support wouldn't be looking very good at all. As a matter of fact, I would be feeling more inclined to say that support looks like it would break. The good thing is that we're overbought, but we went overbought up here closer to 19 cents than closer to 17 cents. So it looks like there's a good chance that even if we have some pullback, it won't even be to 17 cents. It might be somewhere between, I don't know, 18 cents or so, hopefully halfway between 17 and 19, in which case we could continue pushing up to 19 cents and continue making some higher lows to 22 cents and eventually testing that high of 23 cents. That's the most ideal thing that we want to see. The other good thing is that even though our averages are ugly, we have the 50, the 20, and 13 period moving averages all in the bearish order. The good thing about that is that we closed above the 13 period average. You can see this entire time we were really downtrending. We were below all those major averages. But on this area, we're starting to leg up. We're overbought. We're not testing support on the overbought area. Our 13 period moving average is starting to curve. You can see it's at an angle here. So it's starting to curve back around, and we closed above it. So all that's looking pretty good to me. And then obviously the fact that even though we had this dip, it's still well above the price range that we were trading at before this increase. So I think the trend is still, the intraday trend is definitely down without a doubt. Our averages are bearish. Our overbought area is lower, but not on an intraday level. The trend is still very much up in the long term. So I think even if we fall back to 17 cents, and just keep in mind we might even just fall back to 18 cents if we dip, there's a good chance we bounce off and continue making some higher lows and get back to 19 cents. We want to turn that 19 cents into support so we can start working our way to a gap up to 22 cents. Now you might be thinking in your mind, how is 19 to 22 only a gap up? But just keep in mind that when you're dealing with pennies like that, 19 to 22 is about a 15% increase, so that can absolutely be called a gap up. So if we hit 19 cents, there's absolutely a potential gap up to 22, which means that we might not have much resistance on the way there. So if we hit 19, there's a good chance we just shoot right to 22 cents. The hard part is if we do get to 22 cents, we have resistance immediately at 23 cents. So we're going to have to break that again. If we get denied, we might fall to 22, but if 22 doesn't hold, then we can fall back to 19. If that happens, it's still going to be higher than the area that we're trading now, so it's not the end of the world. But if you bought at about 22 cents on the way down to 19 cents, obviously that's not going to be a good story. So overall, the chart's looking pretty good. We had pullback, but the trend is still strong. So let's see what Skyline does this rest of this week. And I'll definitely be taking a look at it, maybe tomorrow or Thursday or Friday, but most likely before the week's over. So keep an eye out for that video if you guys enjoyed this one. If you have any comments or feedback, leave a message below. And if not, well, I'll just catch you in the next video. You guys have a good one, and I'll see you then.